In this video, we'll be going through some of the calculated problems that you have in Connect for Chapter 10. In the first case, we're going to be examining a situation where a taxpayer may have overpaid on their Social Security tax. And how could this happen? Well, a couple things you may remember from an earlier video. Taxpayers are only required to have Social Security withholding on income up to $132,900 for 2019. Well, if a person has two jobs and their combined income is greater than $132,900, they're likely going to be overtaxed for Social Security purposes, because these two employers are likely not communicating or coordinating their payroll withholding. So independently, from each employer's perspective, this employee has not exceeded the maximum of $132,900, therefore they should have 6.2% withheld on all income. However, the taxpayer has to watch for this, because the taxpayer has indeed, with a combined income from both jobs, exceeded $132,900 in income. So therefore, this taxpayer has overpaid into the Social Security fund. And therefore, they can claim the difference between the amount that they should have paid and the amount that they paid. So let's look at some of these calculations. Well, we have total earnings of $135,300 between the two jobs. We have the amount subject, however, to Social Security tax of only $132,900. Therefore, the difference between $135,300 and $132,900 is $2,400. So that amount times 6.2% is the amount that this taxpayer overpaid. 6.2% times $2,400, which is $149. So because Dewan overpaid into the Social Security fund by $149, that taxpayer can claim this as a deduction. But it's up to the taxpayer to watch for this. In the next problem, we have a taxpayer who is paid weekly, and we see that we need to determine how much federal income tax to withhold. Well, in the first case, this Allison's single and paid weekly. So with $1,500 earnings per week, we need to first determine the amount subject to taxation after deducting withholding allowances. So we're going to need to then refer back to the table on page 10-5 of the text, and I brought that up for us here. And we see again, weekly we have $80.80 per withholding allowance. All right, and so when we go back to the problem, in this case, there are two withholding allowances that she's claiming, and that's given to us in the problem. Allison is single and has two withholding. So 2 times $80.80 is the amount to be deducted from $1,500. And we arrive at $1,338. All right, so now we have the amount we can use to look up on the table to find out how much federal income tax should be withheld. And $1,338 is our number. So let's go to the table in the appendix on page 1043. Again, we're going to be looking at paid weekly, single person, and we see on row 3 here that her income, after adjusting for allowances, because that's what we do when we use the percentage method, falls between $832 and $1,692. So she's going to start to pay tax at a base of $87.34, and then we're going to add to that 22% of the difference between $832 and $1,338, and that gives us $198.75. $87.34 her base, because that's where her income falls, and then plus 22% of the difference, or the amount she exceeds, $832. So that is her federal income tax to withhold, and the process continues and is duplicated for each of the following other scenarios. All right, down to the next problem. Henry earned $115,000 during 2019. Is paid on a monthly basis. Married, claims 4 allowances. assume that his employer uses a percentage method of withholding again. So again, we're going to use the withholding allowance percentage method. So let's take a look then. We have the annual earnings, which they give us at $115,500. However, we're going to need to divide that by 12 because we need the monthly earnings, because this taxpayer is paid on a monthly basis. So in order to use the tables and to claim the withholdings and to know how much of FICA to withhold, we need to convert that annual income to a monthly income. And then, much like we did earlier, we're going to determine the amount subject to taxation after withholding. So as I did a few minutes ago, go back to the table. So then once we've gone and we've calculated the amount of her income subject to taxation after taking out the allowances, which I demonstrated earlier, and I have the formula up on the top if you want to repeat that formula, but it's also above, as I demonstrated in the problem number 2. And then we can finally get to the amount of federal income tax to withhold. And again, you go back to the table and use the 8225 as the value, and you can determine, as I did a few minutes ago, using the method that I described to determine her federal income tax. And then you can also determine her Social Security tax. Now, what's interesting about the Social Security tax and the Medicare, which is called FICA, is that we need to multiply her income, which is $9,625. You'll notice that we don't take out withholdings when we calculate FICA. So the withholdings is only used and only considered for federal taxation purposes, not for FICA. FICA is, while true a federal agency, it's for Social Security purposes. We only use withholdings for federal taxation purposes. All right, so we're going to use the value of the monthly earnings of $9,625 and then multiply that by the total of 1.45% for Medicare and 6.2% for Social Security, and that will give you $736.31. So this will be her FICA taxation. This goes to Social Security Administration, and then the federal income tax withhold goes to Treasury through the IRS. Okay, so that is the calculation then, using the methods I described in the earlier problem to determine how much federal income tax to withhold using the adjusted income, and that adjustment is based on withholdings, and then the FICA withholding, and FICA combines Medicare and Social Security using the gross income. So for problems 4 and 5 that I have on my spreadsheet here, these are not required. But if you have an interest in studying these and practicing these types of problems, feel free to use the template I have posted to Blackboard. I'll just go over them briefly if you have an interest. You may recall that employers are required to make payroll deposits, and the frequency of those deposits is based on the size of their payroll. Using a look-back period for 2019, we're going to use a look-back period from July 1st, 2017 to April 1st, 2018, and the total of those, 11, 12, 12, and 12,000, is only $47,000. That falls below the $50,000 threshold required for semi-weekly deposits, so this taxpayer can make these deposits monthly. In the next situation, we have a person who's hired a housekeeper starting on January 2nd at $750 a month. Jacob, however, does not withhold any federal taxes. Assume that Jen is not a housekeeper for anyone else. Assume that Jacob paid $22.50 in wages for the fourth quarter of 2019. How much in Social Security should Jacob pay? And then for Part B, how much in Medicare should Jacob pay? And then finally, how much in federal unemployment tax should Jacob pay? So let's take a look at these briefly. We have the monthly rate of $750, and then we have the amount of wages paid in the fourth quarter of 2019. So Jacob must pay both employee and employer portion, and therefore the amount to withhold is $750 times 12 times 6.2% times 2, which is the employer and employee portion. All right, so this is the amount just for Social Security, the 6.2%. When you get down to the Medicare, Again, Jacob has to pay both the employee and the employer's portion, and therefore when we look at the calculation, we see that we still have the same $750 times 12 months times 1.45% times 2 again, which is employee and employer portion. And that comes to $261. And then finally, amount of federal unemployment tax that the payer has to pay in this case. Well, the 6.2%, we're going to subtract from that the 5.4% credit for the state unemployment tax. So in this case, the taxpayer to the federal government, which is the emphasis in this course is federal taxation, is 0.6% or 0.006 times the first $7,000 of wages. Well, in this case, we have 7,000 times 0.006 as the maximum, or 750 times 12 times 0.006, which again is the minimum, and we're going to look for the minimum in this case. So we just use 750 times 12 times 0.6%, which is 0.006. And we wind up with only $42. All right, so that is kind of a brief overview of the calculation for a household employee, as well as for calculating the amount and frequency of the payroll deposits. If you have any questions on any of these problems, whether the Assign Connect problems or the additional demo problems, please let me know.